Is the crypto bull market officially dead, or is this just another ultimate bear trap? Welcome back to Crypto Link. Today is January 30th, 2026, and the charts are bleeding right now. Bitcoin has officially crashed below psychological critical $85,000 level, hitting intraday low as deep as $81,000. This marks a staggering 36% decline from its all-time high of $126,000 we saw back in October 2025. Over 1 billion in leverage positions were wiped out in just 24 hours, with over 90% of this being over leveraged long position. But this isn't just a random dip. We are looking at a perfect storm of global event. Let's talk about the triple threats that is crushing the market right now. The first up is the Japanese yen carry trade. For decades, investors borrowed yen at near zero interest rate to buy high risk assets like Bitcoin. But this anchor is breaking. Japanese 10-year bond yield just hit a 17-year high of 1.86%, forcing a massive repatriation of capital as investors rush to cover their yen denominated debts. Analysts warns that this 600 trillion yen carry trade unwind could be a liquidity drain unlike anything we have seen since 2008. Second, we have Greenland geopolitical chaos. The Trump administration's move to acquire Greenland has sparked a 10% tariff on 8 European nations, which could jump to 25% by June. The EU is already preparing a 93 billion bazooka retaliatory package, sending investors fleeing into physical gold and silver, while Bitcoin is unfortunately trading as a leveraged beta to traditional tech stocks rather than a safe haven. Finally, the US is facing a partial government shutdown deadline at midnight tonight. Six major funding bills, including those for Treasury and Homeland Security, are stalled in Senate. This physical gridlock is creating a ring of fear, making institutional players extremely defensive. Speaking of institutions, they are heading for exit. Bitcoin spot ETF record a massive 1.137 billion in net outflow over 5 consecutive days. Fidelity and BlackRock saw the heaviest exit, signaling that the stronger hands are trimming their exposure to manage macro risk. Technically, things looks dicey. Bitcoin has breached a major support level of $85,000. If this zone currently it is trading at around $82,000 to $81,000. If this zone falls to hold, analysts see price target as low as $74,000 or even $52,000 based on previous halving cycle theories. But is there a silver lining? Surprisingly, yes, while the majors are tanking, World Liberty Finance, that is WLFI, actually posted a modest 0.4% gain today as it launched a $40 million airdrop campaign on Binance. Even better, the SEC and CFTC just announced a Project Crypto, a joint initiative to finally harmonize regulation and end the era of policy by enforcement. Despite the current carnage, heavyweights like Skybridge, Anthony, and some CNBC insiders still believe Bitcoin could hit $2 lakh by year end once the leverage is flushed out. The fear and greed index is currently sitting at 19, extreme fear. Historically, this is exactly when the most resilient projects are built and the best entries are found. Are you buying the dip or waiting for 74k? Let us know in the comments. Don't forget to like and subscribe to stay linked to the markets, and I will see you in the next one.